This is MyStockScanner live on a Wednesday. We try to give you clarity over chaos and we scan the markets.
Wednesday?
Tuesday.
Tuesday. It's
You said
Tuesday.
I was doing Thursday Tech earlier on.
Well, the thing was that I couldn't even hear my own voice, so no wonder that I'm speaking in
Yeah,
gibberish.
Unfortunately, we can. Carry on. Sorry,
Oh, that's good
sorry
to
we
hear.
interrupted. Yeah.
Brilliant. Yeah, thank you so much. I would have corrected myself. Just wait until Hans-Henrik starts talking about nuclear in Iran and stuff
Yeah,
like that.
that'll be a mess.
Chaos. No, we're scanning the market today for you guys, trying to break down the data and test every idea that we have in stocks with the 3-point playbook. We do it when we look at quality, when we look at upside, and we look at timing. And today we have a full lit for you guys. There's so much on the show. A new CEO, Liam, in Apple, and it's not you, surprisingly enough. You're the tech expert.
It's weird, that, isn't it? Yeah.
Yeah, it is. But what do you think about the new CEO of Apple?
Probably a safe pair of hands, I think.
Yep.
Apple's more an accounting company these days that just counts the money coming into its bank account. So just more of the same, please.
And Hans-Henrik, when we look to the Danish market, we have a lot of movers going on. Royal Unibrew down by 22%. What's that about?
Oh, they have decided to focus on my favorite drink, which is Faxacundi. No, Pepsi are moving to Carlsberg instead, so they're losing a big chunk of their revenue in three years, something like that. So that takes its toll today.
Yes, and we will take a look if it's an overreaction for the market. Once again, welcome to MyStockScanner on a Tuesday, where we stay sharp when the markets and stories collide. Today, we got the big headline, a new Apple boss. We're going to talk about that in a bit, but we also dive into the Tuesday poll and asking you, who is the best CEO ever? And you're welcome to suggest anybody that you like. Not Liam, not Hans-Henrik, please. And apart from that, we're going to see moves, or going to look at moves in Royal Unibrew, H+H International, and Alk-Abelló. And then we have a Tech Tuesday for you. We're going to look at SAP and a Canadian company, if I could get my tongue to go in the right direction, called Constellation. Also, Beyond Meat is back in the headline, 40% up yesterday. And finally, we're going to talk McDonald's because we also have a number of the day, $3. We're going to tell what's all about at the end of the show. But let's start with the headline that's grabbing the world at the moment because it's one of the biggest companies in the world that has a change of guard in CEO. And Liam, we're going to say goodbye to Tim Cook in September. John Turnus, which is a guy who is coming within the company. He's sort of been groomed towards becoming the CEO of Apple. You said it's a safe hand, but it's also a hardware man in that sense that he's not software.
Yeah, and it will be interesting because a lot of the money that Apple makes these days, I mean, the iPhone is still the key driver, but they make a huge amount of money from software and services, and they're just about to start implementing AI, which obviously is more software. It does need more hardware on it, but so it'll be quite interesting to see which direction he goes. But at the end of the day, I think what I said was pretty much spot on here. If I just, if we just have a quick look at Apple, everyone knows what they do pretty much. And no one is very surprised that the quality score is 99 out of 100. So it's one of the best run companies in the world, easily. It's got a lot of sea of green on our play button on first question, which is basically we're trying to work out, is it a good quality company or not? And the answer to that is yes. So then we go on to the second place. My sound still all right, guys? Or
Yeah.
Okay, cool. The second point is really, is there much upside in the company that he's going to come in and either carry on moving to, or is he going to sort of massively grow the company in a particular direction? At the moment, you can see one of the things we like, so the valuation chart really looks at where investors have bought and sold over the most recent or maybe longer term time. You can see we've got a green area, which is the bull case, which is where we think the stock could go if everything goes right for it. We've got a bear case where down here, this is where investors have turned around in the last year or so, and back here and a little bit around here. And then you've got the yellow bar, which is the analysts. They think it's going to go up 10% in the next year and a half. And then this is my actual where I think it's going to go, my base case. So we're really in this channel between these two numbers here. So I think if you bought it now, the worst case scenario is if you held it till next year, you'd be 0.5% down. And the best case scenario, you'd be around 20 to 30% up. So that's the sort of area that we're looking at. Is it a good time to buy? It's just ticked most of the boxes. Our MTI, which is showing whether the stocks are in a good momentum trend or not, has just turned green on the daily, which is a good sign, and it's turning green for next week if everything stays the same here. It's above the 2 moving averages we look at. Actually, Apple's not a bad place to go looking for a stock.
In regards to sort of the practicalities, and of course we're not privy to any information from all information from Apple in that regards, but the thing of the timing that they do a change of the guards in September, I was suggesting at our internal meeting when we talked about the show today, the reason for that is they have something major coming in September. You said not so fast.
Yeah, well, I mean, they're talking about foldables, and everyone's getting quite excited. Everyone in the sort of in the techie side of things, and that's where sometimes it's difficult if you're really into your tech. It's difficult to work out because you look at something like a foldable, and you think that's really cool. Samsung have had a foldable for the last couple of years now, and they've just reduced down their production run for it because it's not selling. So I can see the benefits, I can see the business case, I can see why people would want it, but at the moment, the evidence points to the fact that it's not really going to be a massive money spinner for them, and it's going to cost a bloody fortune as well. It's and in these days, everything costs a lot of money. Big thing that Apple have got in their favor is that at the moment, every other mobile phone company is stalling because memory prices are going through the roof. They're having to put their prices up. Apple are the ones that are still going up. They're gaining market share, so they're not being hurt by these price rises right now. They've also got Siri coming out in a new version of Siri in the next month, I think. So they've got a lot in the next few months to go for, but I just don't know whether new hardware is going to be quite sort of the ticket that's going to take them on.
I would like to ask both of you, because we put out a Tuesday poll in our social media on all our platforms on Facebook in regards to who's a good CEO. Liam, I'll ask you, Tim Cook, will he be remembered as a good CEO for Apple?
I think he probably should be, in the same way of Nadella. They've sort of taken on a company and really changed it. Microsoft was suffering badly before Nadella came on. Apple less so, but he took it and actually made it a hell of a lot stronger. So they're great. To be honest, I think Jensen Huang, he made a massive decision 5 years ago to get into AI well before anyone else noticed it. And at the end of the day, Elon Musk, he has managed to keep Tesla at a PE of over 200 for so long now. He's got to be up there as one of the best.
Oh, I can hear Hans-Henrik is slowly suffocating there. I'll ask you really quickly, Hans-Henrik, before I'm going to go to Royal Unibrew. Your favorite CEO of all time?
I think that would be that Sundar from, I don't know if it's from of all time, but the Google is, I think they have been able to focus on so many interesting tech and kind of growing their AI into something that people actually had thought were worth nothing, and now is actually running fairly quickly. So I think that should go. If it's a CEO of all times, I'm not sure.
Okay. Yeah, and again, of course, there's always hard to decide because a CEO or a founder, it's two different things. Sometimes it is the same person, but that's not what the question about. We put it out as a poll in all our groups on Facebook. Give a vote. Also, give your thoughts in regards to what a good CEO is. So your choice. Give us your background for it. And then, Hans-Henrik, Danish market on the move today. Royal Unibrew is taking a pounding because they have lost. I was going to say one of their clients, because it's not a client, but they are not going to do Pepsi anymore in the Scandinavian markets, and that cost them dearly.
Yeah, that is true. Pepsi have chosen to go with Carlsberg from the end of 28, so that's about 2.5 years down the road. And as we can see, that is about 13% of their revenue. The good question is, Carlsberg have Coca-Cola today. Where are they going? Are they going with Royal Unibrew, so they are swapping? Could be, or Coca-Cola could be going with their European distributor company. But Royal Unibrew is getting a beating today. Carlsberg not as much, because they're basically swapping one brand with another, so that is kind of the same. But Royal Unibrew is losing a big time on this.
Hans-Henrik, now you're talking, Carlsberg. I'm going to bring them up separately because the thing is, as you said, there's no way, at least the way that we take a look at the market right now, there's no way that they will get to keep both Coca-Cola and Pepsi. That's sort of a given, right?
Yeah, I think I think the government would say no to that, and I don't think that either Pepsi or Coca-Cola would be interested in the other part, actually running both of them. So, and the Coca-Cola franchise is running out 31st of December 28, and that is where they're taking over the Pepsi part. So I'm pretty sure they are just swapping one with the other.
Okay, well, it is happy hour officially here on the Danish side. We have more Danish Dynamite for you. We got two companies that we're going to talk about, H+H International and Alk-Abelló. Let's start with H+H International, building company that has received a bid from Polish Solbet to be taken over. And of course, that drives the market.
Yes, definitely. And Solbet already owns 25% of the company. I do get it's a well. They fit right into the Solbet, into the Polish company. They've had a fairly steady revenue. Their earnings per share have been a bit all over the place. And as you can see, it's not a stock we would buy. But if it fits into your portfolio of other companies, it could make sense. We would not buy the stock now on these rumors. Contrary, we would actually, if we had it, we would probably sell it when there's a takeover bid.
And let me just stick to that point just for a second, because we had a company in our portfolio, an American company that produced plastic wrapping and stuff like that, and they received a takeover. Yeah, and they received a takeover bid, and we sold right away. And you say that's just, again, a strategy that we kind of stick to.
Yeah, you don't really know what happens when you can all of a sudden you can get a lot higher price. I think it was 20 or 30% higher all of a sudden we got. There could be a bidding war that could pressure it up, but it could also all collapse and then you go back to same price as before. So we normally take our bets off the table when there's a takeover bid.
Okay, in regards to H+H International, of course, that's not an advice. That's just our opinion. That's the way we do our strategy. But let's take a look at Alk-Abelló, because we are in the biotech industry. And I know that the three of us, we are not agreeing on everything, but we are agreeing on that we know the risk for... No, we're not. See, right there, we're not agreeing. So, but anyhow, no, the thing with biotech, we always say the upside is humongous and the downside equally. Hans-Henrik, take us through it.
Alk-Abelló have had a successful phase 2 in some peanut allergy thing. That is one of the things that drove it up yesterday and today as well. There's no doubt that Alk-Abelló, if you should choose a minor biotech, this is absolutely a stellar company. 98 in quality, everything is going up in the right direction. These are one of the freight trains we're talking about, where that just seems to do everything right. Looking at the value chart, it actually also tells us there's a good upside. So this could actually be a stock that we would look into. It bounced on the 250 moving average here. So there's not much not to like here. There's the MTI weekly that is in red. We might want to wait for that. The thing is that with these companies, if they don't have a huge product portfolio, so if they get a bad phase 3 or another phase 2 that flops or something like that, it could easily take them down. But if you want to get into biotech and accept the volatility, Alk-Abelló is not a bad pick.
See, in regards to that, that was super quick. And I know that you were quick because we have time for Tuesday Tech, and that means that Liam Flavel is going to take over for a bit here. And I'm glad that Liam didn't do a joke in regards to the peanut, that you could buy Alk-Abelló for peanuts. But Liam, let's go with Tech Tuesday. We have a lot of things in Tech Tuesday today. As a matter of fact, we're going to look at 5 stocks, but we're only going to tell 2 or talk about 2 on the show here.
Yeah, so the article's released on the platform, so you can go and look at it on the forum. So I've worked out 5 quality software stocks. So the software's been in a dive for 8 months, 9 months now because of AI. And everyone has basically said software is going to be completely overwhelmed by AI. AI is going to come and rewrite everything for you within 3 hours, and you just need sort of two 16-year-olds sort of running these things to operate your companies. That's correct in some areas. So there are some companies like Monday, Asana, Atlassian, and companies like that that basically give you frothy stuff that actually you can now do quite easily, or without too much cost with AI. But you've got other big heavyweights, and the first one I look at is SAP. These guys run mission critical, absolutely essential core processes for the businesses that it services. And there is absolutely no way that an AI is going to come in and rewrite this anytime soon. And B, a company is going to take the risk that it's going to get rid of its core systems and come in with an AI built one. So SAP effectively produce a major internal finance risk management type products for their clients. They charge a fortune. I always remember that when I was starting in investment banking sort of 30 years ago on the IT side, that was the sort of gig that I wanted, because these guys were charging £2,000 a day back in the 90s. So if you're in SAP, then you're in for a good earner. As a company, it's a stellar company. It's one of the best ones in Europe, probably one of the best tech companies, definitely in Europe. Its earnings per share are going up. Its PEG ratio is below the 2.5 threshold we like. Return on capital and equity are shooting up as well. So, and free cash flow is being generated hand over fist. So, great company. It's something we've had a stock of the day quite recently. So, it's someone that we like quite a lot. You can see that it started dropping in about February last year, bounced back up a bit, and then started dropping from June, which is where all the software stocks started to get hammered. Now, what my argument is that this company is such a core company to its clients that this has been really oversold, and you're basically looking at a fire sale for SAP, because there is no way that it is reduced by 50% in value or even more.
Is it the case of it's a software stock, so everything goes down that's software related, and we're not looking at the name?
That's exactly what's happened at the moment. They're not looking at the quality, they're not looking at the reasons. Investors are just basically saying, everyone's selling software, we need to sell software too. So and we would have sold at the same time, because basically it broke all our rules. Effectively here at this point now, I'm saying the worst case scenario is you'll make 16% on this if you invested in 18 months. If these numbers come through, so basically the earnings per share, okay, and the PE ratio there that investors are willing to buy to pay for, it could go up 45% in the perfect world as well. So that's a scenario. It's bounced really nicely off this bottom line, which is a nice thing to see. I said this a while ago. Is it a good time to buy? Actually, we wouldn't buy it right now. We wouldn't have been in it. We would have come out somewhere around here if we were holding it last year. So we would have come out, missed virtually the whole of this drop down here. And now we're just waiting probably for this to come up and then bounce back down again, and for a bit more green down on the MTI. And then it will be, how many shares do we want to buy?
But we're always talking that we're not buying when it's under the 50-day moving average, but also the 200-day. But looking at these graphs, we would have to wait almost 200 days until it came down.
Yes, it will be a while, because we're actually quite away from that point now. So we're 37% down, and that's our point. We picked up a number of tech stocks in April last year after Trump's tariff came out, and then he tackled a little bit and everything started going up again. That's where we made a lot of money on Oracle, on TSM, and various other tech companies, and they were below the 200-day. So it's a rule that we decided to relax last year in exceptional circumstances, because there was such a big upside in there, and it's one that we'd be prepared to do for the quality, and we already have. Our members have had 2 stocks last week that are under their 200 that we think are real quality, that are going to go far.
And now we have a different stock here in the tech part, and we're going to tell about 5 in the article that you're going to put out. And you have to be a member of MyStockScanner to get to see all 5 of them. We're going to give one more here on the show. It's a Canadian stock, and don't confuse it with an energy stock of the same name, Constellation.
Yeah, Constellation. It's an incredible company, actually. I'd not really heard that much about them. It's made up of over 850 small software companies or tech companies over about 100 different industries. So they're huge over in Canada, and they just buy worldwide. And again, they buy key parts of software companies that provide services that people can't do without. Automotive dealers, they have their IT systems that are just built on these guys' software. So that's for instance, you'd have to rip the whole lot out, put it back in again. Massive risk to your business to replace these guys. So you can see here the quality is 97 out of 100 in Canada. It's just absolutely stellar. The earnings are scheduled to go off the scale from last year. The PEG ratio is really low. It shows, there's a, we'll see on the value chart, there should be a lot of value coming in there. The returns are going down almost certainly because of the amount of money they're investing in capex to actually, pull everything together again and start building sort of some real value. So they've made a lot of investments and buying other companies over the last few years, which has really driven those returns down. But I expect to see those go up again. Free cash flow again is exploding upwards. So it's a really good quality company. From a valuation perspective, I actually could see them trebling, going up 200%. And the analysts think the minimum is going to be 54%, and actually 28%, 30% this year alone. So in the next 6 months, analysts expect to make 6 months, 30%. And actually, I agree, that's probably the minimum that you're going to see out of there. And then from a pure technical point of view, the stock has just popped above its 50-day. It's sort of, trying to test going down again, resisting it a bit. So this could be something that we look at with members in the next week or so.
As said, you will be privy to see the entire article that Liam is writing every Tuesday, every Thursday. Tuesday Tech, definitely interesting today's German SAP and then Canadian Constellation Software. You will read more about them in our members group. And then Hans-Henrik, we have to take a look at the macro side of things. We always do that, and we saved it a little bit. You have a theory in regards to how pressured Donald Trump is at the moment, the president of the US, if he's not going to get a deal with Iran.
Well, there is a ceasefire that is running out here, and the good question is, can they meet on some common ground? And I don't think they can. The Iranian, they have experienced that they have had the power. They have seen Trump blink, so to speak. They have seen him tackle several times. So I think, and they. To be honest, they don't care too much about the public in Iran. I get that feeling. The other thing is, on the other hand, Trump needs a huge win. If you look at, and I'll just show you very quickly, here we have Iran's amount of enriched uranium back from 08, and that was going up, and they wanted a nuclear bomb. Then there was a joint negotiation done. Trump says it was Obama, but it was actually both US and Russia and UK and France and so on that did the deal with Iran, and that means that they basically got rid of all their uranium. Then Trump became president, tore up the agreement, and now they are back above the old levels. That means that he cannot just come out saying, I made the same deal as Obama. He needs something extra. And I don't think the Iranians are willing to give him that. And therefore, that is my guess. I think this ceasefire will end without a solution. And Trump have said quite explicitly, he will basically tear the country apart then. Iran, that is, could be US as well.
But he has said a lot of things in regards to the deadline. We shall see. Of course, we're keeping an eye out for oil prices, which are dropping today. We're looking at gold to see if there's any indication what's going on.
I actually have futures up a bit here.
Oh, there you go. See, now it's starting. It depends on, again,
the time frame if you're looking for.
Yeah, exactly. That's what we're talking about. One thing is that it could be a taco. That's of course always on the table when it comes to Trump. And tacos in the US normally are filled with meat and not something that looks like meat. It's real meat in a taco. That's the way they do it. But we're going to talk about Beyond Meat and Hans-Henrik quickly. In that sense, I thought that name was buried and done because it had a huge pump and dump. and then disappeared. But it's up 40% yesterday. What's going on?
Terrible company. Well, there are a couple of news. They have made some collaborations with some companies, something breakfast and something non-alcoholic beverages. So that might be some of the reason for it. And then if we look just quickly in here, I'll not do too much of analysis on it because it is terrible. However, we can see here that there's a short interest of 30%. That means a third of all these stocks are shorted, which means that all the people that are short, they're being squeezed right now. So they want to close down the short because they don't want to be on the wrong side of a move like that. To close down a short, you need to buy back the stocks, which is lifting them. I think this suits Beyond Meat quite well, because if they are under $1 in price of the stock when we hit the 31st of August, they're getting kicked out of NASDAQ.
So there's a lot of different movements here, and that's one of the things that's always interesting in talking to the two of you, is that you keep an eye on stuff like that, whereas the rest of us just basically worries about what's the price of a Big Mac at McDonald's. But that we're going to talk about, because apart from being our expert in fashion and tech, now he's also the expert in fast food. And there is a number, Liam, in regards to McDonald's, and that is that they came out, that's number of the day, $3. They came out with a McValue meal. And the interesting part is Wall Street took notice, not because they're going to eat McDonald's, but they say it's a good investment now because they solved the whole thing about the prices were too high for fast food.
It could be, and that actually shows you that inflation is starting to bite, and there are sort of real problems worldwide in this area. From a company point of view, yeah, we got a bit of a bounce, 1.5%, something like that. There is actually potential. You can see here, I've just put the value chart onto our trading view chart here, which you can do. We're below the 50-day moving average, which is this green line here. We're just bouncing on the 200, which is a positive sign. And it's really used that as a magnet to bounce off of over the last few months. Analysts think 12% upside. I think if you hold it for 18 months, probably 2%, but you could see 30% upside as well. So it's an interesting one. And from a playbook perspective, it's pretty green. I mean, the analysts, they haven't really moved on it too much. Everything else is not too bad. And free cash flow, which is one of the key things we always look at, is actually good and stable and solid, and earnings are going up. So yeah, I mean, it's very beige food, but better than the vegetarian Beyond Meat. But yeah.
So if the choice were Beyond Meat and McDonald's, we know where we have you. That's fine. That's good to know. They're also a dividend stock to top it off with. I think it's 2.5%.
2.4, something like that. Yes.
2.4. So in regards to that, could be a play in volatile times. Another thing that we need to tell you before the show is over today is that we are taking our show on a move, in that sense that we are moving to 4 o'clock in the afternoon coming next week. Monday the 27th, the Danish show will be at 5 o'clock. On the 28th, we're going to be at 4 o'clock every Tuesday and Thursday with the English version. So remember that. Also remember, follow us on YouTube. Do sign up to follow us, because then you get alerts in regards to when the show is on. You are not going to miss the show. Give us a like on various social media, and you will get all the information that we put out. Liam Flavell will come with an article. You'll get a taste of it in all the public groups. You have to be a member, so do the free membership of MyStockScanner, and you will get to see the entire article with all 5 tech stocks that he has been sort of teasing us about. 2 of them, that is Constellation from the Canadian side of the ocean, and then we have SAP's German one. Guys, I hope that we get to see each other on Thursday at 1 o'clock. That will be the final time we are on at that time slot. For now, happy investing out there. Have a great Tuesday. Not Wednesday. It is Tuesday. So don't listen to what we say in the start of the show. Have a good one, guys.